What's going on, YouTube? In this video, I'll break down how to read the market's direction using only price action through the lens of CRT and a clean top-down approach. Let's get straight into it. Candle range theory is how I read the market with no indicators, no guesswork, just price. I approach from the top down so that I can understand higher time frame momentum, candle structure, and directional order flow. Now, in doing this, I only have one goal in mind: directional clarity. This is before the real move even begins to take place. Now, real quick, I want to get into why most traders struggle with direction, especially if you're paying attention to indicators. Indicators lag. They tell you what already happened. Now, candles don't lie. They show you the energy that's happening right now in the moment. Now, the key here is flow, structure, not signals. Most retail traders, they actually look from the bottom up. CRT teaches from the top down. So this way you can capture the momentum, pressure, in the current phase. So with that being said, here's how I break direction down. In this case, you want to start with a higher time frame candle body. So in this scenario, I have the daily time frame candle. Now, the reason that this is important is because this is going to show us the area that we are going to be operating within on the lower time frame. But first, let's take a look at this current range that we are on here. Now, if you read the order flow of this time frame, you will be able to tell that we are making lower highs and lower lows. So what I'm going to do now is I'm going to draw out this phase with arrows to make it as clear as possible for you to understand, right? So we have this lower low, lower high, lower low, lower high again. That's pretty much close to a equal high, but then we know that from this area, we are expecting a lower low to continue downwards. Now, next, what you want to do is understand your current range of operation. The range of operation is the energy core of the market. Is where the market gathers, stores, redirects, or prepares energy for the next major move. Everything the market does outside of the range of operation is a result of the energy that was built inside of it. So very simply, our range of operation is the point that stems from our major high to our major low. Our major high being this area here, starting from here, starting from this high point here. Our range low is the low point between these two wicks here. So now with these 2 points mapped out, you now have your successful range of operation. So now within this range, your goal is to then be able to spot the accumulation, the manipulation, and the distribution. The accumulation in this range is the energy collection. The market is generally calm, pulls in liquidity, and is preparing. No immediate direction, but intent is forming. Next, you have the manipulation. This is where energy is being reshuffled. So you will have fake moves, false breakouts. It might sometimes even look chaotic, but it's just the pressure being redirected. And last but not least, you will have the distribution. This is where that built up energy is unleashed. Price now follows the path of least resistance. True direction becomes very, very visible. So now with all this being understood, our goal is to go on a lower time frame and look for an area of liquidity that can fuel our next movement lower. Now on the 30-minute time frame, we want to begin to flow with where the direction is already going based on our previous daily time frame candle strength. What we can see here is that price is still going in a bearish direction. So now what we want to do is look for our peak areas of liquidity where price will then have enough fuel to go back lower. And our very first thing that stands out to me here is this lower high. So let's draw this area out as our first area of liquidity. Now, secondly, we also have another point that exists here. So by going to the 30-minute time frame, we now have a point of reference that we want to see price head up into this area before showing us more bearish momentum. Now let's just watch and see what happens. Okay, so we want to still wait. So within the CRT phases, right, what we have here, this whole leg is our phase one, in this case being distribution. Okay, now what we are in right now as price begins to head back up into this area is the manipulation. And so we're going to look for this manipulation to complete and our distribution phase to then begin, following along with our lower time frame momentum and higher time frame directional bias. Let's continue watching. So as we can see here, price did eventually make its way all the way back up and collect the liquidity that was within the range that I have drew previously. Let me extend this out. And now very quick, before actually engaging in this area, okay, you can restart your directional bias from a top-down perspective to see if there was any higher time frame CRT forming within this area of liquidity collection. Okay, so now as we can see, going on the 3-hour time frame within this actual area of liquidity being collected, we have a 3-hour CRT setup forming. What I'm going to do now is draw out this CRT high and our CRT candle low. So now with our CRT high and low mapped out, once we go back on our lower time frame, we can then sort of see exactly where we are in this exact moment. So now in this scenario, I went as low as the 3-minute time frame, and what we can already see here was within the 3-hour manipulation candle, we actually had a minor accumulation building up, which is our new phase one. I'm going to now draw a rectangle to represent this area. Let me change the color. So within this minor accumulation, we now have a minor breakout below, followed by a temporary retracement before we look for our entry. Now, as we can already see, we have another minor CRT phase with an bearish engulfing candle that is underneath our phase one of accumulation. So therefore, this area will be safe enough right here for an entry. Stop loss you can put somewhere above the previous accumulation, and now we can then target overall our CRT low from the 3-hour candle, because we are now able to pinpoint where we are with so much more accuracy overall. Once you are actually entered within this area, your primary target for now would be our 3-hour CRT candle low. So just to help speed this up a bit, I'm going to go back to the 3-hour time frame where you can watch the directional flow play out in real time. Here you are, we have a 1-to-4 overall trade projection, and now we will watch and see how price begins to do within this area. Okay, eventually our CRT low of the 3-hour time frame did get swept, and anything underneath this area is considered extra. So our target would have been a 1-to-4, but we would have peaked at somewhere around a 1-to-6 if you decide to stay in longer to possibly milk the market for even more. Now, as soon as we have this candle low swept here, that is a clear sign that we should exit the trade, because the market is temporarily doing another retrace and collect more liquidity before an even larger move. So let me clear that. Now within this area, okay, for the 3-hour time frame, we are still operating within a new range of operation for the 3-hour time frame specifically. So our range of operation high being this high up here is already a line here that corresponds with the daily time frame, so I'm going to leave that. But our new range low will be these lows that the market still was yet to collect. Now, to clear this up even more, right, we're going to remove this from our previous candle CRT, and now extend and draw out a new range of liquidity that we're now expecting price to come back up into. Let me just move this over. We have this here, and since this area wasn't tapped, I'm going to just bring this over even more. Okay, so now I can clear up this, because we're still operating from this daily candle momentum. Okay, on the higher time frame, this area was a large engulfing daily time frame candle. So let me just clear this up for now. What we want to see is a candle formation come up, possibly close within this area of these highs, and then target our lows overall, and still remembering that on a higher time frame, we are operating within our daily range of operation that's ultimately targeting these lows here. Okay, so now let's look until price comes back up into this area of liquidity and see how price behaves. very quick. Our very first reaction once price came up into this area was a minor bearish reaction. Now, you could have still capitalized on this area if you had chosen, because you had a CRT high here that was minor from the 3-hour time frame. Still, you had this high, this low, and then you could have entered somewhere within this manipulation. I guarantee on a lower time frame, there was another accumulation, manipulation, and distribution cycle that you could have found for your entry and wrote that down and understood once again, once you got this candle closed and this low was swept, it is time to exit. But ultimately, what we were waiting for was price to come within this area, have a full close above this range of liquidity, because the full candle close shows you that price has now finally collected enough fuel. So with that being said, what we want to look for within this is another CRT formation. So we want to see this 3-hour candle, this 3-hour candle high beginning to be swept here. Same thing with the low. Now let's wait and see if price does in fact sweep this high here, because there is also still a maximum range of liquidity that is at this level. Now this level now becomes our key level, because it is the highest level that price has to reach before going back down into the downwards movement overall. And look, so this was a very, very, very fast reaction. But just to break this down, I'm going to break down this area where we could have found our perfect entry. Okay, within this area, let me go to like a 3-minute time frame. Okay, let me try the 2-minute. Okay, perfect. So within this area, what you actually have is a very quick manipulation. So what price did is, it was likely a slight news event that manipulated price higher. You then have a bearish candle followed by a clean lower high engulfing, with that being this 1, 2, 3, 4. So there's 4 candlestick formation here. This is a clean entry. In this scenario, your stop loss would be 42 pips, because this was an area of high volatility. So in areas of high volatility, your stop loss would generally be higher, but it is still very good in terms of overall risk to reward. In order to make this make sense, our target has to be at least a 2 risk to reward or higher. So we could put a stop loss around 22 pips, which is still very clean, because we are giving ourselves enough room if the market still needs to move further. Once again, we will enter off of this engulfing formation, showing bearish momentum beginning to take back over within this current range of operation. And now we're looking for our CRT low on a 3-hour. But ultimately, let's go back to our 3-hour time frame, because now we understood where we are in structure. Here's what our entry will look like on the 3-hour time frame, and within this area, our max target will actually be these lows here that were within our current range of operation from the 3-hour perspective. So now once price breaks underneath these lows here and is collecting more sell side liquidity, what we understand is that we are still operating within this daily time frame range of operation. So if we wanted to, you can even hold this all the way down and capitalize on a large risk to reward that was very smooth and clean. Let's watch the market and see how it reacts and target those lows. And there you go. Price continues and breaks through this area with lots of momentum, because what price actually did was it gathered all of the fuel that was at these highs and started to target all of these lows now with less and less resistance over time. Now let me go back to the daily time frame so you can see how it unfolded like that as well. So from the daily time frame, we can now see that the momentum began to pick up very quickly and we targeted our lows. So now from the daily time frame, we can see that within our range of operation, price swept and collected these low points, and we could have capitalized on a 15 risk to reward trade if we decided to hold. So if you found this video useful, make sure to subscribe, like, and share for more, and I'll see you on the next one. Peace.